Good morning, everyone, or good afternoon, depending on your time zone. My name is Dimitri with Sense Financial, and I will be answering your questions today. Looks like I'm going to be solo. We had a little technical difficulty, and Leah is having trouble joining us. But if she can join us, she'll take over reading the questions. But until then, I will be reading your questions and answering them right after. Just to remind you that we have several pre-submitted questions, and we will have the opportunity for you to type your questions. You can go to the chat section and you can type your questions there. Sometimes if I read the question, if it's unclear, I'll mention that, and you can follow up with maybe providing some clarification so that I can address that towards the end of the Q&A. And if there's new questions, you can certainly type them as well. But we'll go ahead and get started. And first question is coming from Tom. And Tom is asking, can you explain details about the mega ROT conversion? So the mega ROT conversion is a strategy that allows you to contribute the maximum allowed to the solo 401k. And again, the maximum is nearly $70,000 a year. The contributions to a solo 401k consist of two components. There is elective deferral components, which is 23,500 plus the catch-up if you're over 50, and there is also super catch-up if you're, I believe, between ages 60 and 63. And then on top of that, the company or your business can contribute profit sharing contributions. The combined limit is, again, depending on your age, is going to be in the neighborhood of $70,000. Once you make your elective deferral contributions, and then on top of that, profit sharing contributions, if you did not reach the maximum, but you do have the income in that year, then you can actually make after-tax contributions to reach the maximum. And then immediately you can do a ROT conversion. So after tax contributions, obviously that's you have not been taxed on those amounts. And then immediately you can do ROT conversion, which will not be taxable then, because again, that is post-tax contributions. All right. So hopefully that clarifies your questions. And Tom, we do have detailed guide on how to make mega ROT contributions. So you can head over to the client portal, go to the knowledge base, and you can just simply search using that keyword mega ROT, and you should be able to read all of the guidance there. As a reminder to all the clients, we do have this resource on the client portal, the knowledge base, and we have answers to most of your questions there. So make sure that you're utilizing that resource. It is available to you 24/7, and you can find answers to most of your questions there. All right, so next question, let me see here, pulling that up. So next question comes from Dana, and asking how to earn 25% a week on my retirement plan with no risk. So I'm not sure what you're talking about here. This is probably investment question. I'm not sure which investment you're referring to. 25% a week seems too good to be true. So I can't comment on that. I can't answer that question. I don't know of any way to earn 25% a week. And here we are to answer your solo 401k questions, not investment questions. We don't offer investment advice or investment guidance. As a reminder, we do offer self-directed retirement plans where you're in control of all of the investments that you're making. All right, let me see here. So next question coming from Tanya, and Tanya is asking, can you please explain how profit sharing works with solo 401k? I was in the workshop and the instructor gave an example that he makes $1 million a year. He paid himself $250,000 and put $750,000 in a profit sharing and salary into solo 401k. I thought there was a limit on what you can contribute from salary and profit sharing. So how was he able to do that? To be honest with you, Tanya, I have no idea how he was able to do that. He probably was referring to something else, not a solo 401k, because again, with the solo 401k, there is a limit, and that limit is between $70,000 to $80,000 a year, depending on your age. You cannot contribute more than that. So he was referring apparently to something else. But just to follow up, actually on the very first question, the contributions with the solo 401k can consist of two components. There is elective deferrals, which you contribute as a employer or as a participant into your solo 401k, and that is between $23,000 to $31,000 depending on your age. And then a second component is a profit sharing, and the profit sharing is up to 25% of your compensation. So if you have a S Corp or C Corp or LLC taxed as a corporation, it's based on your salary. If you're sole proprietor, that will be based on your employment self-employment compensation. We do have a contributions calculator on our website. So if you go to SenseFinancial.com and then go to the solo 401k menu, and then on the sub menu, click on the calculator, it will take you to the solo 401k contributions calculator, which you can. Next question is coming from Joseph, who's asking, can you please provide more information on the upcoming amendment? Joseph, if you are a solo 401k client, solo 401k clients, we made that announcement recently that IRS requires all of the plans to be updated according to the IRS regulations. There have been some changes in the law over the last few years, and there is a secure amendment that is required to be adopted by the end of this year. Working with all of the clients, and depending on where you are in the queue, but your plan will be amended. We will be issuing an amendment that my team will contact you, and you will have to adopt that. So basically, it's a pretty simple process. You will receive a document via Zoho Sign that you will just need to sign electronically. And that deadline for that, again, is before the end of the year. My team will be reaching out to you in the upcoming months. Next question is coming from Joe, and he's asking, if I make a passive investment with my solo 401k in a rental real estate, am I subject to UBIT tax? So Joe, if you invest in a rental real estate with your solo 401k plan, you're not subject to UBIT tax, because all of the passive investments in the solo 401k, they will be exempt from any kind of taxation. The only investments that will result in the UBIT tax, and UBIT stands for unrelated business income. So if your K plan generates unrelated business income, and let me give you an example. If you invest in an active business, let's say you purchased a franchise with your 401k. As a reminder, as a disqualified person, you cannot be involved in that yourself. You can't do any work. You can't be personally involved. You're going to have to outsource everything. But it is possible for your 401k to own a business. Will that be a wise move? Probably not, because of that tax implication, because the business will generate active income, and that will be subject to BIT tax, or unrelated business income tax. And that tax is, the tax rate is about, I believe it's 37% right now. So again, retirement accounts not really designed to be invested in active businesses or running active businesses. You want to invest in passive investments. But again, it is possible. You have to do your own analysis and make your own determination, maybe talk to your CPA, but rental property certainly will not be, or income from rental property will not be subject to UBIT. Now, let me also add to this that if you're considering buying real estate inside of your IRA, because we have many IRA clients, we have people listening who are IRA clients, or perhaps want to set up a self-directed IRA. If you buy real estate inside of an IRA, if there is no leverage, again, there is no UBIT implications. If there is leverage, if you're using a non-recourse financing to obtain and basically finance the property, then there will be some tax implications on the leveraged portion of real estate. A solo 401k is exempt from that, but IRA, the taxes applies inside of an IRA. It's not a big deal. It's not going to be anything major. You just need to be aware of this. All right, next question comes from Narayanan. I'm sorry if I'm mispronouncing your name. He's asking, what is the preparatory steps when you are close to retirement for maintaining solo 401k account after you retire? Can you close the LLC if you're not working, or need to maintain the LLC for keeping the solo 401k active for distributions during your retirement? Really good question, and it's really important for you and everybody who listen to understand that the key here is to plan in advance. You want to be thinking about things like that ahead of time. So, but if you are retiring, if you're closing your business, if you're no longer self-employed, if you're no longer have an active business, then you probably might have to close the solo 401k, because in order for you to maintain a solo 401k, you're required to have an active business or self-employment activity. So if you're able to maintain some sort of self-employment activity, it can be using your existing LLC or not. You don't have to have LLC to maintain a solo 401k plan. You do need to have activity, employment or business activities. If your main business is LLC and you're closing that, and if you're able to do something, some sort of activity just under your own name as a sole proprietor, then solo 401k plan can be amended to change the sponsor. So we'll remove the LLC. We'll put you as a sole proprietor, as a new sponsor of the 401k plan, and the plan can continue even during your retirement, so to speak. You might be retired, but you might still be doing some activity on the side, and that will help keep your plan alive, and you continue to make investments and maintain the solo 401k plan. But if all the activity stops, if there is no business, no self-employment activity, you have no entity that generates any revenue or provides any kind of service, then you will need to terminate the solo 401k plan. So looks like Leah just joined us. Glad you were able to resolve that technical issue. And we were just on a question from Narayanan, and we're moving on to Javier. Would you please read that question?
Absolutely. Javier is asking, why does it take so long for documents to be updated to comply with new rules?
Javier, I'm not sure which rules you're talking about or the length of time. If you are one of the onboarding clients that coming up, then your plan documents will be updated, because we got a couple thousand clients to work with. If you're referring to the secure amendment, I just explained that a couple of questions previously to that. Gearing up for a restatement. There will be a restatement period that will begin at the end of this year. So we're not behind on any of those, and your plan documents will be updated as required by the IRS.
Our next question is from Ram. What is the best way to protect my company by trust?
Ram, that is not a question that I can answer. We are here to answer self-directed IRA and solo 401k questions. I'm not sure I even understand this question, how to protect your company by trust. Typically, will give you my best to answer your question, but typically, if you have a business, you will either set up a limited liability company or a corporation for a protection. A trust is not a vehicle to protect from the liability. Trust is used for different reasons, but you probably need to talk to an attorney to receive some guidance there.
Kenneth would like to know, please provide examples of
Kenneth, again, this is a self-directed solo 401k and IRA session here. So we are not here to provide you with the investment advice. Again, I'm going to give you my best to give you some examples, because I'm a private lender myself. Many of our clients do private lending out of their IRAs and case, but example here, if you have money in your IRA or 401k, you can use your IRA or 401k as a bank. There are people who need money, and if you have money, you can be the lender to those people. And you can either find someone or you can use a broker to connect with those people, and broker can actually facilitate the loan, and you just come in and you fund the loan. My recommendation will be to only do secured loans. Don't do unsecured loans, because if you're making an unsecured loan, then 100% of your investment is at risk. And I personally like secured loans that are secured by real property. So if somebody again, let me give an example. Somebody owns a property that is worth $200,000, and they own that free and clear, for example, and they need some capital for whatever the reason is. It can be maybe to start a business, maybe to buy another investment property, or to make improvements on the property that they own. And if for various reasons they're unable to get a loan from the bank, and that's very common, they can go to the secondary marketplace, that's where the private lending comes in. And so let's say they need $100,000 and they talk to you, you've got 100,000, they own a property that is worth 200, and you agree on the terms, and let's say that's going to be, you're going to lend them $100,000 for 3 years or 5 years at the rate of 10%. So your okay will serve as the lender, and the property will be used as a security for the loan. So you've got pretty low LTV, 50%, and that is I think that's a great investment. You're gonna generate a pretty nice return. Your investment will be protected by real property, and I've done number of loans similar to that, and many of our clients do that. So I think this is a great way to invest.
Our next series of questions is from Joel. He does have a few here that I will read out. What are the processes to open an account, and what is the amount actually required? Can a 457 funds be used to open an account? What are our fees? And are there any penalties for withdrawing funds on 457 plans? Joel's also asking, who is the administrator for the plan?
Well, Joel, thank you for your questions. So yes, it is possible to set up I'm actually not sure what will be the best vehicle for you. You didn't mention, because again, there is a possibility to set up a self-directed IRA or self-directed solo 401k. Now, anybody can establish self-directed IRA, but you need to be self-employed or own a business in order to establish a self-directed solo 401k plan. But 457 plan, which is that's you're probably working for a government agency or nonprofit. If you have 457 plan, then yes, it is possible to fund your self-directed IRA or solo 401k with 457 plan. You need to be probably no longer be employed at your previous employer to do that, because if you're still employed, you're probably not going to be able to access those funds. But yes, you can access those funds without penalty if you do a direct rollover. And that means that you establish a self-directed IRA or 401k, and then you submit a request for a direct rollover from the 457 plan, and funds will be transferred directly into the new self-directed plan. So there is no tax consequences, no penalties for that. If you are using IRA, there will be a custodian, but we specialize in a checkbook control retirement account. So there will be either LLC or a trust established that is owned by your IRA. You'll be the manager or trustee of the trust or manager of the LLC. And so you will be in control. There'll be a custodian who holds the IRA, but you'll be in control of the assets. You'll have checkbook control. The amount required, there is no minimum, so you can actually fund it with as little or as much as you wish. There is no dollar amount that is required. Yeah, so my recommendation for you, Joel, will be to reach out to our office and actually schedule a complimentary consultation. We do offer complimentary consultations for anyone who is interested in exploring if this might be a good option for them. So you'll talk to one of our experts who will take the time to listen to your situation and then kind of guide you, help you decide what will be the best option for you, and then you can go from there.
Thank you, Dimitri. And we do have a question here from Jane. She is new to the 401k and she is over 60 years old. She's asking, is there any way to withdraw funds from a solo 401k without triggering a taxable event? I've earned some returns on real estate investment loans and would like to withdraw the earnings. Would this be considered a regular taxable disbursement? I think so, but I just wanted to confirm.
Yeah, Jen, if you're over 60, then you can take taxable distribution. So there'll be tax consequences, but no penalties because you're over normal retirement age, and you can start taking distributions after that. And so this is a great strategy. Actually, you want to ideally in your younger years, you want to accumulate enough assets that produce enough passive income so that you can use those passive income to without touching your assets, and potentially it can last a lifetime. So we do have resources again for the distributions and detailed guidance on how to do that on the client portal. So again, head over to the client portal, go to the knowledge base and search for that keyword, and you'll find the guides there. And our team here at the office can provide you additional guidance if needed.
We do have a next question here from Bianca. Is converting a traditional IRA to a self-directed IRA considered a taxable event?
Well, it's not convergent. That's not the proper term here. The proper term will be if you have a traditional IRA and you want to move that into a self-directed IRA, yes, you can do that. The term will be, again, once the new self-directed IRA is established, then you will submit a request to your existing custodian for a transfer. And transfer is when you move money from one IRA to another. Again, from one traditional IRA to another traditional IRA. You will have a self-directed IRA, but it's still an IRA. It's still a traditional IRA by tax classification. So it will be considered a transfer. Transfer is when funds are moved from one IRA to another IRA. This is not even a reportable event. So it's not taxable event and not even a reportable event. Your sending custodian will not going to be reporting that because it goes directly to the custodian. So yeah, you certainly can do that and reach out to our office and we can help you accommodate this.
Bianca would also like to know, if I invest in a property in Ireland using my self-directed retirement IRA trust and I need additional funds through a loan, is there a bank you recommend that provides these types of loans?
So Bianca, if you need funds to acquire a property, now you're saying here that's going to be out of country in Ireland, that's probably going to be tough. Now, if you're buying a property here in the US, there are a number of lenders that will do those kind of loans, and those loans called non-recourse, because if you're buying a property inside of an IRA and you wish to finance that, you cannot use conventional financing because you're a disqualified person, and as a disqualified person, you're not allowed to provide a personal guarantee. Conventional loans are prohibited in this case. You need a non-recourse loan, and non-recourse loan means that you're personally not providing any guarantee for the loan. The property will be the only security for the loan. That's what non-recourse means. So you can certainly do that. There are a number of lenders that offer this kind of financing inside of a retirement account, but that's mainly for the U.S. properties. If it's out of country, I'm not aware of any lender that will finance a property out of the country. You might be able to find a private lender, again, maybe someone you know who will be willing to take that risk. I don't know that, but it's most likely it's going to be a cash deal. You're going to have to use cash, so plan for that.
All right. I believe that is all of the questions that we have for today. And just in case if anyone is interested in vendors that we would recommend, we do have a list of that in our website, and I have included that in our chat box below. We'll also have this recording available as a recording. Sorry. So this webinar available as a recording. So if you had sent out a question but you missed it, you will be able to see it in our YouTube channel.
Yeah, well, thanks, Leah. Again, you guys had some great questions here, and join talking about that. Join us during the next Q&A. We'll send an announcement about that. And again, if you're new to self-directed IRA world, then reach out to us and schedule a consultation with one of our experts. It's complimentary. Our goal is to help you, and if that makes sense to you. So again, thanks for joining, and have a great rest of the day.
Thank you, everyone.